Hello to my amazing family on YouTube. Hope mko fiti kabisa. So leo nataka kuongelelea tu a strategy that is lucrative, yeah? An important strategy. Okay, and what I'm hoping for, what I'm hoping about is that once you learn that particular strategy, you'll be able to implement that particular strategy on your daily trading journey. So today or tonight, actually it is kitu saa moja hivi. So tonight, that hiyo inaonyesha how much I love you guys, because I can do anything for you guys. Naweza spare some time after nime go through a lot of activities in the day, just to spare some time so that I can share with you an idea that it is actually uh, an idea that will be helpful for you guys. So I'm just going to go ahead and share my screen. I'm going to go ahead and share my screen. I'm going to go ahead and share my screen. So right here is a plain chart, okay? It is a plain chart. But let me start with what we call top-down analysis, moving from the higher time frame to the lower time frame. So on this particular uh, moving average crossover strategy, I'm going to share with you guys some few moving averages. This red moving averages that you're seeing here, it is actually a 200 moving average. It is a 200 moving average. The yellow one that you're seeing right there, it is a 50 moving average. And the next that you're seeing, the light blue moving average that you're seeing, it is a 20 moving average. So how do I incorporate these particular moving averages to actually make some good cash out of this particular market? This is what we call top-down analysis. So what do you see once you open your daily chart? Because you are either a day trader or a swing trader or a scalper. But scalpers mostly trade on the 30, 15, and the 5 minutes time frame. But for me, a day trader, I will first of all go to the daily chart to see the bigger picture of the trend, and also go to the 4 hour to see where I can make my decision, and then go back to my 1 hour and make my decision. So the overall trend of the actually going to the higher time frame, you see the overall trend of the market. The overall trend of the market on odd CHF right now is on a downtrend. Okay, the market is trending to the downside. How do I know that the market is turning to the downside, or if the market is actually a bearish market? Once the price is below my 200 moving average, which is the red line that you're seeing crossing above this particular area, once you see price playing below, not above as you see here, once price is below that particular moving average, we are in the seller's market, right? Once price is below that particular moving average, which is the 200 moving average, we are in the seller's market. Okay, now when you see the blue line below the yellow line, we are actually in a seller's market also. But it is a good time once you see a crossover happening on the daily chart, where when crossovers happen on the daily chart, it means it is a bigger move that is going to happen on uh, that particular pair. Once you see a crossover like this, you know that the market is about to actually trend to the upside with a bigger in either some few days or some few weeks. Okay, that is on our daily chart. The price is below, we are into the seller's market. Also price is below uh, the, the blue moving average is below the yellow moving average, which is a seller's market. You can see that on our daily, but there is something that is happening on this particular market, even though the price is below this particular moving average. The price has just come. The first price here tried moving out, it couldn't, it is down. The same thing happened here. We have seen a pin bar, which is a daily pin bar operating. That was yesterday. It closed below, but today we can see that another candle is just about to close above this particular blue moving average. Once price closes above this particular blue moving average, we'll be buying the market until we reach this yellow moving average, which is our 50 moving average. And once price closes above this particular yellow moving average, you'll see that this blue moving average curling inside, okay, making a shape of a crowbar. Okay, if you understand a crowbar, it is when actually it is a shape that is formed when this particular moving average will be crawling inside, like what you're seeing here. Once the moving average start crawling inside, we know now this movement is about to go to the upside. Okay, it crawled inside, you saw this particular movement up to this particular area. So once price closes above, you'll see this particular moving average crawling inside. Once it crawls, you will move this particular price until your take profit will be somewhere here. If it closes above, then you take that trade to this particular area. If it closes above, then you will be breaking out of this seller's market to a buyer's market. Going to the 4-hour, where now we make uh, our assumptions from. Okay, right here you saw price, it was below this particular moving average, which is our 200 moving average. The same thing happened here. Price closed below the yellow moving average, and the blue line was below both the red line and the yellow line, where now we were selling this particular market. If you could have just entered this market once this cross happened right here, you saw that the moving average was spreading out. If you see the moving average spreading out, you know that the momentum is in the market and the market is ready to move in that particular direction. But once the moving average are closer like this particular area right here, it is your time to stay out of that particular market and wait to see where the price will break. Once you see a break like this, you will see the moving average spreading away. So the yellow line was above the blue line, and the price remained below the blue line. It was a good time for you to sell. Once price started moving inside of that particular blue line, got out of the market and you waited. And once price broke away and started moving away of that particular blue line, that particular moving blue moving average, which is our 20 moving average, it was now time for you to also sell. Once it crossed inside, you're out of the market. And then once it it crossed at this particular area right here, you saw the moving average crossing, which is now what we are talking about today. Actually, it is a moving average crossover strategy. Once you see the yellow line above the blue line and the blue line going under the yellow line, it is now time for you to sell some and also make some profit. The same thing now is happening right in our eyes right now, where we can see now the market. Okay, actually the blue line, which is a light blue line, which is our 20 moving average, crossing the 50 moving average, whereby we are now seeing the 20 moving average above the 50 moving average, which is our yellow moving average. It is now time for you to buy the market until you reach this particular 200 moving average, which is our take profit area on our pair right here. So once you saw this cross, enter the market. Your stop loss was right here. The market played, and then we are inside this particular pair, and if we are riding that particular pair until we reach somewhere here, which is a good area where the price reached before. Reach there. Once the price reaches there, we'll be out and wait and see how price will behave at this particular area. When we go to our 1-hour chart, the same thing is happening. Okay, the same thing is happening. We're already in the buyer's market. On our 1-hour chart, we're already in the buyer's market because our yellow line is below our blue line, and our red line, actually price is above our red line, so we are into the buyer's market. So us buying this market, we are not doing it wrong because we are following all the processes that are happening in this particular market. Okay, that is one prayer. Let us go now to another prayer. Let's check odd card, and let us go and see what is happening on our daily chart. On our daily chart, we can see that price is below our red line, okay, which is the 200 moving average, and also price is below our blue line, okay, but the same price is coming, is moving its way to our blue line. We'll wait and see if we have a rejection on this particular 20 moving average, we're selling the market. But if price closes above, we'll actually buying it until we reach our yellow, and then the same thing happens until we come out of the seller's market to our buyer's market. But what do we see on our 4-hour chart? On our 4-hour chart, the price is actually at a place where we say it is hard for it either to break up or break down. But here the moving average have actually converged. They're actually very tight together. We wait and see if we have a crossover. Once this particular candle closes, we will now be taking this particular trade until we reach this particular red line. So here we are not into the market. We're just waiting to see if this particular crossover will happen. We're taking the market. The same thing that happened here. Once the crossover was happening right here, once we saw this particular crossover, we took the sell. Okay, we took the sell until we reached this particular area. We saw it coming back, we were out of the market. Once we saw another crossover right here, okay, the yellow was above the blue and the red was crossing all the other moving averages. We are selling the market. Right now, we will wait and see what will happen on that particular area. On our 1-hour chart, you've just closed above this particular moving average. So what we will do, we will wait and see on our 4-hour chart. Okay, we'll go back to our 4-hour chart. Right now, yes, the movement is happening, but here we will wait and see if we get what we call a crossover, we'll buying that market. But what again is not good about moving averages is that they are slowing indicators. They show the market once it has already happened. Okay, when you go to the 4-hour chart, you can see that the movement has not yet happened, but when you come to our 1-hour chart, you can see the movement has already happened. All right, so it is either for you to determine which particular time frame you want to trade on. If you are a day trader and you want to actually base your assumption on the 1 hour, you can go with the 1 hour. If you entered at the 1 hour, you saw this particular crossover, you are in, you made some money, the top, you go like, got another take profit will be here. Your TP1 was right here, your TP2 was right here, your TP3 will be somewhere here. Okay, so that is it. Another prayer that I can look upon, let me not exhaust this particular strategy, but it's a good strategy. Once you see a crossover, once you see the market above this particular red line, you're buying the market. Once you see price below this particular red line, you're selling the market. Once you see price below this particular uh, red line, you're selling the market. Once you see price above this particular moving average, you're buying the market. Once you see the candles grow, actually the yellow line below the blue line, you're buying the market. Once you see the yellow line above the blue line, you're selling the market. That's all about the moving average crossover strategy. Thank you so much, and see you around. Thank you.